There are some massively important details to talk about regarding the markets. I'm here to talk to you about it. I am Dr. Stock, Doctor of Education, and I got a new pair of golf socks and they were working out really well until I got a hole in one. So I have a massive amount of information to break down for you in this video, and I guarantee that it's worth every second. We got to talk about the PPI numbers that just came out. We got to talk about the federal funds rate. We also have to talk about market impacts, SPY, QQQ, IWM as they track the S&P 500, the NASDAQ 100, and the Russell 2000 respectively. So we're going to take a look at all those charts, give some context to them, some technical information as well, some technical analysis, and then I'll also just quickly go over some of the stocks that I've been following. And if you want to see the others, there is a link down to the Patreon down below. You can go ahead and check that out. I'll save that for later. For right now, let's get into those PPI numbers and get the ball rolling here. So PPI expected to be 0.1%, came in 0.2. Core basis 0.2, came in 0.4. 2.5 for the year over year numbers came in at 3%. Markets kind of held a little bit steady on that one though. And then when we move on from there into the year over year numbers for final demand for PPI, 2.6%, expected to be 2.3. And so when we look at the core numbers, let's look at that year over year. Look at the trend that we've been on for those producer prices coming in. If we put that out to a max level to see what that looks like, we're actually getting near some of those peak prices that we saw. And so we need to see some sort of change back in the other direction. So I think the pressure for PPI is now on July's number. When we get those in the middle of August, I think that's going to be highly impactful to the markets. And we need to watch those prices because the producer prices, as they increase, can also increase the numbers that we see for CPI as well. So we need to watch that influence as it comes out. Now, if we look for a high level breakdown of it, goods, we actually had a decrease, 0.5%. Services came in at 0.6% of an increase. Now, for the goods, if we go into it, most of it was energy goods. You can see that we had a steep decline in those energy prices. Goods also decreasing a bit in those producer prices, and then less the foods and the energy. When we look at that one, industrial chemicals dropping down quite a bit, dragging it down. Passenger cars up a bit, and you want to pay attention to passenger cars when we look at that, because when we go to services, there we go. You can see trade services really spiking up there, and then transportation warehousing down. And then the last one that we have here is less the trade services and warehousing. But if we go into trade services, automobiles and auto parts retailing, 6.3%. I mean, everything is up. Machinery, food and alcohol, health and beauty, apparel and jewelry, and then fuels and lubricants retailing. Like, this is where those big spikes came in when we look at PPI for those producer prices. So I think that's some of the reason why the PPI didn't have a bigger initial impact on the markets, but it is something to definitely watch for those trade services. And then also for the goods, for the decline, the fact that energy was most of that, and it's a very volatile area. This is something also to be taken, the PPI results, with a bit of a grain of salt as we look for that. Now, mind you, if we do enter a period of recession, then the energy prices could continue to decline. So we want to be watchful for that as well. So moving into what we get for federal funds rate. So what we got is a change from almost just over 8%, 8.3% yesterday, cut almost in half down to 4.7%. Up for a rate cut, which took it from something like, yeah, maybe, down to, yeah, most likely not. So 95% chance that we stay where we're at for the federal funds rate for July. And I'll say that's probably closer to 100% chance that we stay there. Based on what Jerome Powell has said and the information that we're seeing, there's nothing that convinces me that it's going to turn heads around and we're going to get a surprise rate cut. So if we go out to September, nearly a 100% chance, 98% chance of 1 to 2 rate cuts. Still about 100% chance for that 25 base point rate cut to come along in September, which the markets could actually react negatively to at first because, hey, why are we cutting rates when you said higher for longer? That's something to also pay attention to. If we look at the December numbers, just to see what we would end the year with, right now we only have under a 7% chance that we stay where we're at or that we get just 125 basis point rate cut. Right now, 2 to 4 is being priced in of the 25 basis point rate cuts. And so that could happen all at once. That could happen a little bit at a time. It doesn't have to be 25 basis points either. But he did say that they want to move slow and measured. So we'll see if that plays out. 2 to 3 is the most current likelihood that we see for rate cuts, that we're down to 450 or 4.5%. All the way up to 5%. And so that's something to be watchful for that. Now, for the markets themselves, let me bring this down and we'll put up the charts so we can start to see where exactly yesterday's market put us and where exactly we could go from there. By the time you see this, the market's likely to be in action. We'll see how some of this stuff plays out, and you can verify what I said as I record this. Is currently 9:12 a.m. market time. So let me put up the chart here for you. Here's SPY. Here's what I'm seeing. A bearish engulfing candle. Critical support. This was critical resistance. We broke up through it. We came back down to it. Critical support. It's not very surprising that we have a bit of a bounce taking place right now. If we break that support, we can start to hit this rising wedge support that we have here. And I know I need to adjust the view so that you can see that it's a rising wedge better, because it looks kind of like a bit of a bull channel that we're in right now. But we're actually in a rising wedge inside of another rising wedge. So that's something to keep in mind. You can see that we had somewhat higher volume, especially compared to the previous days, just barely above the 20-period moving average that we had for the volumes anyway. So this is something we could have a larger move down. I don't know that it happens today after such a big rip yesterday. It is possible that we take a bit of a bounce and then we start to sell off lower. Maybe it happens today. We start to see a sell, but I do think we could return to this trend line. The 20-day moving average is also here. So doubling up on support. We have bounced there before. Breaking down through that is a much larger sell, probably taking us down to the 50-day, which is all around 534. So I think it's highly likely that we revisit down here, and then we'll see what happens from there. I think that we're going to find support probably around the 20-day, probably around this trend line that we have here, this rising wedge support as I have it labeled. And so breaking down through that is where things start to get critical for more of a corrective territory, if you will. Over to QQQ, you have much the same thing. You got a nice bearish engulfing candle. You definitely have stronger volume on the Qs, confirming the direction that we have here. And then you can see the 20-day moving average support, not far below that. And we are actually at the bottom of the bull channel support that we have right now. So can we bounce? Absolutely. Can we break down through it? Absolutely. And I will tell you, if you can see these wicks sticking out of the bottom of this, there's definitely room for us to catch that 20-day. Because if I just shift this down here to where we're at the bottom of those wicks, then we could get that touch on the 20-day, which would be a third touch here, which would confirm that this is also part of the bull channel that we're looking at right now. So if I play it a little bit more loosey-goosey, I don't think that just breaking out of the bull channel is enough. I think we have to also lose the 20-day solidly, one full candle down below that 20-day to really tell us that we're going to move down farther from there. So we broke the critical resistance. We peekaboo just up above it a little bit. And then yesterday we had that big sell. So let me go to Russell 2000. I'll give my overall take on the large caps that we have, S&P, QQQ, and then I'll also talk about the small caps here, what I think is going to take place. So here's what I think. This is the weekly chart that we're looking at for IWM, which tracks the Russell 2000. I think that we could possibly find ourselves up in this historic resistance, this area of resistance that we have in here. I don't know that we make it into the breakout area yet. So on a daily basis, we had excellent volume. On a weekly basis, it's pretty good so far, but we're at the end of the week. And we just have today's trading volume yet to show us where we are. So if we get another strong volume day today, that puts us strongly up above what we have here for this blue moving average that you see along here. And especially competing with some of these other spiked up volumes, that could be something that could show us a larger move to the upside. If we are able to overtake 218, we can make it in its breakout area where we have room up to about 229. And then we hit another big area of resistance, which we found back here during 2021. So that all in there is about pretty much 2021. So where do I think we find ourselves in this market right now? And I'll get to the individual stocks in just a moment. But for the indices, are we done moving upward for SPY and QQQ, the S&P and the NASDAQ 100? I don't think the run is quite done yet. I think that we're going to have a little bit of a yucky time where we see some more red coming on, especially with those engulfing candles that we have, the bearish engulfing candles. And I think that we're going to find support. I think we're going to take a good, healthy bounce. And there's still potential for all-time highs to take place in there, especially for the indices, if we get a market broadening effect that's not just the large caps, which I think could easily find support and take a nice healthy bounce as well. But then some other stocks also in the S&P and the NASDAQ also follow suit, and we get a broadening out of those. And so we'll see if we get that push up. And if we do, that can be a very bullish thing. And then I also think that for the small caps, I don't know that we're completely out of the weeds yet. I don't think that we hit the all-time high that we saw back in 2021, but I do think there's room to the upside on it as well as part of that broadening, that small caps are getting a little bit more attention. with the inflation numbers like we saw with CPI coming down. So is it time to go all in bull on IWM from where we're at right now? And not financial advice. This is just my own take and my own thoughts that I'm sharing with you. And you can keep it in as part of your due diligence as you do your research for the positions that you take in the markets. But for me, the small caps, I think, are something that should have that attention paid to them. I think dollar cost averaging, that now could be that effective time, because I think between now and what we see in Q4 could be that time that we start to see either some value come in, or that we start to see those prices start to increase over time for the small caps. So IWM not doing terribly so far, already had a nice move up, found ourselves against this resistance. It's a historic resistance. And then today moving up above that, not necessarily surprising because of the strong move that we saw to the upside. And unfortunately, my family was traveling yesterday, so I wasn't able. I made the video, and then soon after we left by about noon market time yesterday. And so wasn't able to position myself on an options basis for SPY and QQQ. Might take some advantage of that today. Certainly with IWM expecting a stronger move up. Wasn't able to take advantage of that, but I'm excited to be back in the markets today. We'll see what we do. All right, so let me put the charts back up here, and we'll talk about BTC. We still have not broken over. Look at all these resistances that are out here. We retested the 200-day, and guess what? We got rejected. We keep on getting these high wicks. We could have a further sell, at least on a daily basis, for Bitcoin. We gotta break those resistances. That hasn't changed. The selling pressure isn't necessarily done. Yesterday's market didn't help us out. So are we done? Are we cooked for Bitcoin? I don't know. The story's still out on that one. We still have these long wicks on the bottom of this thing. We still have that buying pressure coming in the low to mid 50s. So if that buying pressure gives out and the bears take over on this one, well, then that's something we could see. Will we retest the 200? Well, we'll retest this trend line first, most likely, unless we move up here today. Otherwise, tomorrow, we'll retest that trend line if we retest it at all. And then we still have to break above that then to get to the 200. Then we still have to break up above 60,000 in order to have further upside available to us. Will it happen? Again, watch the resistances. If we can't break those, if we get rejected, then it's about finding support instead, which is in the low 50s, and after that it's in the mid 40s. So we need to watch to see where Bitcoin's going to go. Enphase had a strong volume day yesterday, and what we got was a spinning top candle out of it. We got really long legs coming off this thing, or high wick, low wick, and a really narrow body off of this. The next day can confirm the direction. So you have indecision between the bulls and the bears, and on good volume. So should be a bullish day. And it looks like in the pre-market, and the market's going to open about 10 minutes here. Looks like if we can break the 50 and the 200, we could have further room to the upside for solar. It could be a nice time over the next 30 days or so for small caps, for interest rate sensitives, to really ride their way up. So IWM could benefit. Solar could benefit. And then certainly, well, we'll talk about Tesla next on this one. I'll get to them in just a moment. We are above 50 on the RSI for Enphase. We did bounce off the bottom of the channel. Well, top of the channel happens to be at about 138. Do I think we're going to start really finding that recovery in solar? Not yet. I don't think that that's the time that we're going to find that next big recovery that sends all solar stocks through the roof. But I do think that we are in a time where we could still find some significant appreciation before we start the next leg down. So that's where I think that we're at right now. So for a Tesla, we had a spinning top candle. It was further dropped, was confirmed. Not only did we have a very big engulfing candle here that wiped out the last 4 days of trading. So now, mind you, I think some of the market excitement that we had, some of the lucid excitement that we had, kept this momentum going a little bit longer than it should have otherwise. Now, mind you, we also had a cadence to Tesla stock. Well, yesterday we had that big sell triggered by, and somebody in the comments let me know this first, and I was able to go and look and confirm it, taking the robotaxi day on August the 8th and moving it out into October. And what that does for Tesla stock is, well, you can say fear, uncertainty, and doubt, but let me be more specific on this one. It interrupts the cadence of the run that we were on, because what we had was delivery news, boom. And then we have earnings, boom. Then we have robotaxi day, boom. So it was like boom, boom, boom. You know what I mean? And you can feel that beat in your heart and you're like, yeah. You know what I mean? And then yesterday, not only is the market selling off, but we also get the news yesterday that robotaxi's delayed. So it's like boom, boom. And then And like, where'd that beat go? Well, you know what I mean? And that's where the market was put. So not only were we probably going to get a drawdown from being oversold, from being overbought, from the markets also being extended pretty darn well for that rotation that we saw, at least somewhat into the small cap, some of the excitement that we saw got put over that way. But then on top of that, we got some delay thrown in, a wrench thrown in the gears. So let me put the chart back up here. What does it mean about my $300 stock price prediction? I changed it from green to yellow with a question mark at the end because I said by August the 8th, by Robotaxi Day, and I said that a lot of things had to line up. And well, now August the 8th isn't there to line up with. So what does that mean about the price prediction? That means that the pressure is now significantly on earnings to impress, which means that we could have a further move down, not only from a technical basis, but also from a fear, uncertainty, and doubt basis of, man, these earnings better be great. If I'm going to put my money back into Tesla on a trading basis, now mind you, I'm a long-term investor and I hold my position in shares on Tesla. I'm just talking in general, not necessarily about myself, but market sentiment, Tesla sentiment right now. The pressure is on Tesla to really impress with earnings in order to give us that significant bounce that catalyzes us to get back up to 300. And those earnings are on Tuesday, July 23rd, after the market closes. So that's going to be a huge day. We could get a drawdown until that day happens. I would be surprised if we get a massive run up by the time that happens. Now, we do have some support areas in here. 245 is now resistance as of yesterday's close, being below it. And it's not too surprising that we're actually down a little lower today after that volume, after that drop. And 232 is that next support we find, which is right near the trend line support. And that trend line goes back years. That goes back to November 2021. And so this is going to be very critical support for us. If we break down through that, we have 200-day support to fall at, which also happens to be the most recent 61.8 Fibonacci retracement value. So could we draw down to the 200-day? We could. I don't know that we get there. The 50% fib, by the way, is somewhere in the 220s. And I'll draw it on for you quickly. I just don't want to overcrowd the chart because then I think it's already crowded enough as I talk about this. 218.95. I thought it was 220s. 218.95 is where we find that fib retracement on that one. And I think that 218 or below, we could possibly see those values. And then, like I said, the pressure, in my opinion, is on earnings to impress us, to catalyze us, to get us excited again, to return us to that cadence that we had going, with the momentum that we had going for Tesla stock. So NVIDIA, just to update this, had the rising wedge. I talked about that in my yesterday's video. We did peekaboo up above it. I adjusted the technicals to account for that little peak that we had right there. It's a lower high. We actually came down and had an even low. So the important thing to pay attention to for NVIDIA are these low prices that we have here. Now, mind you, if we put in a higher price, good. But if we don't put in a higher price, well, then it's a higher low or an even high, something like that. But these low prices, 120 is that next line that we had to be watching. After that, we had to be watching 118.76. After that, we have to be watching 115. If we start to put in lower lows, that is an indicator to us that we're starting to really see a decent correction taking place to NVIDIA's price. And we know that that's possible. It'll likely take the Qs right along with it. I don't think that NVIDIA is going to move down without the Qs also moving down. As we know that AI has been a huge concentration for the Qs moving in the first place. And the last thing, if you've stuck around this long, guys, and I know that this is a long video, and that would be SoFi is the bonus stock that I've been throwing out there, and I have other ones that I've been following, and you can see those over at the Patreon. You can check this out. August 30th earnings is what we're looking for. We're looking at the weekly chart right here. I did adjust my technicals a little bit as of yesterday's peak, that we haven't still necessarily broken out of that in the pre-market here. Market opens in 4 minutes. If we blast out above that on good volume, we're still watching for that volume confirmation to come in. If we do push up above that, that can give us a switch from bearish to bullish momentum on a weekly basis for SoFi. And a breakup above this trend line is bullish. We sort of had it with the other trend line that I had, but now that we had yesterday's resistance, that actually gives us a much better trend line. Looks like I can refine it a little bit more to be right there, that we have at least 3 touches on that line. So are we going to get there? Today could honestly tell us if we're going to get there, if we're going to get that run up. And that would put us above the 50-day. It would also mean that the 200-day up at 761 would be where we'd find ourselves for significant resistance. And we do have not bearish momentum as I had from my weekly chart, but here I'll update this for the daily chart. Yesterday put us in bullish momentum territory. And if we have that tailwind of the weekly momentum switching from bearish to bullish, that would really further catalyze the stock price for SoFi out of this descending wedge pattern, which is in green because that's a bullish reversal pattern that we're looking for. So that's what we're looking for. So for SoFi, for the breakout, not necessarily confirmed yet, but it is looking like we could possibly very reasonably potentially get there in the very near future. All right, guys. I hope you like my commentary. Let me know what you think down in the comments. Join me over at the Patreon. Join the Discord that's available through that Patreon. That's where I post my buys and sells. That's where you can talk to me and my community members throughout the trading day. We'd absolutely love to hear from you. And if you want to learn to do technical analysis like I do and learn to really empower your portfolio through technical analysis trading, you can get that trading course down in the description as well. You click that, sign on up, find all about the bread recipe, and I even have a chapter about options in there as well. So thanks for watching, guys. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.